Hey traders, David Frost, LazyGapTrader.com. In this video, we're talking about day trading. More specifically, we're talking about gap trading and how gap trading is by far the single most consistent and profitable day trading strategy you can find across the markets today. I do a couple of things. The first one is I teach a course where within the course, traders learn two specific gap trading strategies. The first one is known as the morning gap trades. This is where stocks that are gapping higher or lower at the open, generally from either an earnings announcement or some other related news event, it creates an opportunity. The opportunity is for traders that can identify a specific price where stocks will first be drawn to like a magnet, and secondly, have a price reaction from in the other direction. In the course, traders learn exactly what criteria we're looking for, what are the specific characteristics of the stocks, what type of volume, which stocks we want to play, which stocks we want to avoid. Everything they need to know is found in the course at Lazy Gap Trader. The second strategy is known as the gap fill strategy. When stocks do gap higher or lower at the open, it creates what's called an open gap. At some point in the future, those open gaps will be filled. Traders learn and are given a tool to track them. We learn how to trade them. Not all trades are created equal. It all depends on how these stocks come in to fill the gaps that determines whether or not it's a viable trade and a profitable opportunity. The other thing I do is give traders an opportunity to get my gap trades sent to them each and every morning at 9 o'clock a.m. Eastern Standard Time, 30 minutes before the markets even opened for business. Here's a copy of the email that went out this morning, and as you can see, it arrived more than 30 minutes before the market even began trading for the day. We had 4 potential gap trades on the board this morning, and what we're doing is only taking the trades that come into the specific levels, the specific price levels that we learn how to calculate in the course at Lazy Gap Trader. If a stock does not come in to the specific price we're interested in, it's off the board. It's not the highest probability trade we can find. We only want the highest probability trades which give us the highest probability and opportunity for profit. Out of this list, one stock hit the specific price level this morning, and that was Block, H&R Block. HRB is the ticker. I say gap lower. Support levels are $26.99, $26.44, and $25.83. Stop and profit target is about 20 to 35 cents. These are minimum profit targets, and all this is discussed in detail in the course. And then I go on to say, prices are close together. Traders can take half a position at the first level and add if the stock trades lower. That's my way of telling traders that while the price levels are close together, this is an area that will be supportive of the stock, and we should get a price reaction in the other direction regardless. This happens from time to time. When the support levels are compressed together, it's a good indication that we're going to get a price reaction in the other direction, and therefore we're not going to be afraid if the stock trades through the first level by a little bit, because we will get the snapback that we're looking for. We're going to look at HRB in detail in a minute, but first we just want to note that the other 3 stocks did not hit their price levels. Therefore, they're off the board, they're a scratch, they're non-trades. Why? Because they did not hit the specific price level that we were interested in trading at, which gives us the highest probability trades and the highest probability for profit. Now, I've taken HRB down to a 1-minute chart so that we can see magnified exactly what happened. The stock started trading below the $26.99 level right before the opening bell. And traders that have taken the course know that when that happens, that has an impact on the trade, and they know exactly what to do with that situation. But remember, the levels were close together as identified in the morning email. So one way or the other, we're expecting a price reaction in the other direction. We're expecting a snapback. You can see what happened. In the first minute of the day, the stock made a low of $27 even, coming up short by 1 penny of the $26.99. Second minute of the day, the stock broke through the level and traded down very close to the second level. And this is why I indicated to traders the compressed nature of the support levels. And as you can see, by the 4th minute of the day, the stock was at a high of $27.74, representing a gain of 75 cents from the original entry point of $26.99. On a $27 stock, that's a tremendous gain in just a matter of minutes. And then the stock came back down a little bit, but that's okay. The trade is over at that point. It was a quick trade, quick profit. We're on to the next opportunity. That's what this morning gap trading strategy is all about. The large majority of the trades will happen within the first few minutes of the day, if not certainly within the first 90 minutes of the day. Hence the term morning gap trades. Now, I don't do this often, but I'm going to show you an email that came in this morning as a result of this trade from one of the longtime members. Now, Peter's been with me for a long time, and you can see what happened. Just 3 minutes after the opening bell, I get this email from him, plus 45 cents HRB, slam bam, thank you, man. I love when my traders tell me about their success stories, so I answer him immediately. That's great, nice job. And he answers back, it took all of 22 seconds. Now, is that typical? Not necessarily. Does it happen a lot? Yes, it does. This is a strategy that you can realize quick profits each and every day. That's what it's all about. We identify the opportunity, we take the trade, we're in, we're out, we're on to the next opportunity. Now, I know Peter's trading style. I know that he made at least $450 on this trade, if not more. But whatever trade size each individual trader is able to take for themselves, a profit is a profit. It's more money than you had when you started the trading day. Traders, this is a strategy that you can use each and every day for the rest of your trading career. If you want to learn everything you need to know in order to trade the gaps successfully, come over to Lazy Gap Trader, see what it's all about. It's a strategy that you can use for the rest of your trading career. I'm David Frost, Lazy Gap Trader. Thanks for tuning in, folks.